Imagine this. You are living abroad, maybe in Europe, maybe in the US, maybe in the UAE. Your family is back home, wherever that is. They need money, rent, food, the medical bills. You open your banking app, you send a transfer, and then you wait 1 day, 2 days, maybe 5 days, and you pay fees. Your bank charges you, their bank charges them. The middle banks take a cut. And the worst part, you have zero control. This is how global money has worked for the last 50 years. Slow, expensive, closed on weekends. And that's where stablecoins enter the whole story. One day someone asked a simple question. Why does sending an email take 1 second, but sending money takes 3 days? Crypto tried to fix this with Bitcoin, but Bitcoin was volatile. You couldn't send your family $100 because tomorrow it might be worth $80 or $150. You don't know. So the crypto world created something new, a stable coin. A digital dollar that stays at $1, a euro that stays at €1. A digital version of fiat but on the blockchain. Suddenly, you could send money to anyone in the world in seconds. No banks, no holidays, no permissions. This was revolutionary. And the governments, exchanges, and countries realized something very important with this. They realized that stablecoins are not just crypto, they are the future of money. Think about it. If billions of people use a digital dollar issued by you control the global money rails. That's why exchanges are launching their own stablecoins. Banks are building tokenized deposits. Governments are planning for digital currencies. Countries are experimenting with national digital currencies already. Because stablecoins are becoming the new SWIFT system, but faster, cheaper, programmable. So here is the part that probably most people don't understand yet. Stablecoin issuers hold billions in real dollars and government bonds, and they earn interest on that money. So if a company issues $50 billion in stablecoins, they can earn billions per year in risk-free interest. It's like printing digital dollars and collecting interest forever. So ask yourself, why would governments let private companies like Tether and Circle control this? They won't. And this is what we are seeing nowadays. We see countries like Trump, for example, himself, for the US issuing stable coins, the World Liberty Financial USD, or the so-called USD1. And I'll give you other examples shortly. But this is one part of the story because of risk-free interest forever. Stablecoins are not just about technology, they are about power, they're about control. If you control money, you control economies, you control people, you control geopolitics. That's why the US wants digital dollars to maintain dominance. China wants their own currency to bypass sanctions. Europe wants the digital euro to stay competitive. Emerging countries want independence from the USD. And yes, governments also want visibility and control over transactions. That's why decentralized stablecoins are becoming strategic in this. That's why we see so many of those being launched nowadays. The old financial system is breaking, as we can see. Debt is exploding, banks are so fragile, inflation is persistent, trust is declining. Stablecoins are not just innovative, they are a bridge between the old system and the digital future. They are what replaces bank accounts for the internet generation. And you have, as I said, World Liberty Financial, USD1. PayPal issued their own PYUSD. This is the first big tech stablecoin with massive distribution. You also have Ripple, XRP. They issued their own RLUSD. Banks, for example, Societe Generale, the euro-pegged stablecoin that they issued USC convertible. This is one of Europe's largest banks issuing their own stablecoin. You have JP Morgan. They issued JPM coin, tokenized deposits. So we see everyone, countries, institutions, governments moving towards stablecoins. There is a big wave for it right now. And I'll explain something in a simple language. Every time you use a stablecoin like USDT or USDC, you might be helping to fund the US government without even realizing it. Sounds crazy, right? But this is one of the most important hidden connections between crypto and the global finance today. Think of the US government like a person who spends more money than they earn. If you earn $1,000 but spend $1,500, you borrow $500. The US does this on a massive scale. It owes tens of trillions of dollars. How does it borrow? It sells something called treasuries. The government says, lend me $100 today and I'll give you more money back later. Traditionally, those treasuries were bought by other countries like China, Japan, banks, pension funds, insurance companies. But today, some countries are buying less, and the US still needs huge amount of buyers. This is where crypto enters the story. Stable coins are digital dollars on the blockchain. You know that. They try to stay equal to $1. So when you buy one stable coin, the company behind it must keep real money somewhere safe. And the safest place is the US government treasuries. So if a stablecoin company issues $100 billion stablecoin, they might buy $100 billion in US treasuries. That means crypto companies are lending money to the US government. Every time people use stablecoins around the world, the US gets more funding, which is why we see such boom right now. Stablecoins are secretly becoming some of the biggest buyers of US debt, and we know that US is drowning in debt. This is why governments and Wall Street suddenly care about stablecoins. They help keep the dollar powerful. They create global demand for US debt. They turn crypto into a new financial infrastructure. And just to put it in one simple word, every stablecoin is basically a tiny loan to the US government. This is what is happening. So when you see governments, exchanges, and countries now launching stablecoins, don't think it's just a crypto trend. This is global money reset happening in real time. And we also, as altcoins holder, have benefit in that because these stable coins are built on the blockchain. Ethereum is currently leading on that, but we have newer chains like Sei, Sui, Casper potentially that would benefit from that. There is already demand for Sei. Currently leading are Tron, Base, the layer 2 chains, Solana, and Ethereum. But we see the new chains like Aptos, Sei, Sui, that are having high speed, they're having stable coins partnerships already, and VC and institutional narratives. These are the next generation payment blockchains for sure. And these projects will see benefiting and performing pretty well in 2026. It's great. And the next bull market and this next wave of the market won't be just about Bitcoin. It will be about who controls digital dollar, digital euro, and digital liquidity. And if you understand this early, you're positioned before the world realizes what is happening. So make sure you hold these solid blockchains that we would see global money reset happening on. And if you want to see how I'm benefiting from those, which stable coins are being launched, which narratives are doing great, feel free to join Discord. This information is available there. Thank you for watching. I'll see you in the next video.